Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, April the 5th, 2017. It is a Fed minute day. It is also an ADP employment change. It was like I said yesterday in the room, it's a great opportunity to trade gold on those ADP reports. Got another one coming up on Friday. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down and look at our trade levels, our targets, and our hypotheses for the day. We create four main hypotheses in order to have a plan in place for whatever the market throws at us. We do not know what the market's going to do. We can only have a plan in place for the different scenarios that could play out and then execute on that plan once we see what the market is doing. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. Read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. All right, so let's go to yesterday. I'm going to bring up the composite first because I want to point this out because this is something that I always tell people to watch for. And you can see that we had Monday, we had this big, it's almost a dragonfly doji, but it's got it's a bit of a red body, but the wick. I was telling you yesterday morning that both my main hypotheses centered around getting stuck inside of that wick. I call it getting stuck in the wicks. What it really is an incomplete auction, and the market has to go and further auction that wick, and you can get stuck in there. You can actually get stuck in there for days, especially if you've got more than one. So when you see that, it's a good indication that you're going to get a day that is going to be that's going to follow, that's going to be rotational. So our main hypothesis yesterday was a open auction in range. We are looking for a rotational day with a move down. We said that we would test up first on the main hypothesis and then rotate down. But I said that I put equal weight on Hypo 1 and Hypo 2 because of the fact that I was expecting to visit both HVNs of the double distribution. And you can see that we tested up first into the upper distribution, didn't quite get to the 54.50. Then we rotated down to our main target, which was the HVN where the VPOC was most of the day. You can go back to the video on YouTube to look at this. And then we were looking, okay, for the possibility on Hypo 2 to find buyers down at the value area low and then rotate us up into the naked VPOC, which was our main target for Hypo 2. But all in all, I said we're likely to get an inside day with a small, tight range, and we had this beautiful Gaussian distribution, okay, and value remained constant. Our VPOC was 54.50. Our VPOC at the end of the day was 53.75. So we were only 3 ticks off of the value. More importantly, we did not change anything yesterday. Our close on Monday was 56, and yesterday we closed at 56.50. So we're right back in this balance. Now with the ADP, we've moved up into that longer term balance, and we've come right back into that 1260 level. Anyway, we'll get to all that. Let's just take a step back. Let's take a look at the news, because it is Fed Day. We did have ADP, non-farm employment, came out way better, big beat. I traded gold to the short side on it, and I was so focused on that because I put 12 contracts on that I didn't get to trade the ES to the upside. But there was a beautiful long off of the 57, 58 area into that 60, 61 area. We have 9:45. We have U.S. final services PMI coming out. Then we have another big news event, okay, at 10 o'clock, which is going to be the ISM non-manufacturing PMI. It's expected 57, previous 57.6, and then 10:30, we have another big news event, okay, which is going to be the crude inventory. And then 2 o'clock this afternoon, okay, is going to be the fireworks, and that is going to be the FOMC minutes, and give us a clue on whether or not they're going to get another rate hike or multiple rate hikes. So a lot of news today. If you are profitable, keep it tight now. Don't try to hit home runs. Just hit singles and keep your green. Okay, so each morning I like to start with a simple candlestick chart. I start with a monthly. I use a 9 EMA and a 20 SMA. And what I want to do is I want to get a sense of where we are within the time frame. I'm looking for slope and separation of the two moving averages. I start on a monthly and I work my way down into the intraday. And I'm looking for, how strong the trend is, where the trend is being violated, any candlestick patterns or chart patterns that may pop out at me. And I do this in order to understand where we are in all the different time frames and not get a bias one way or another. So monthly, multi-year upward trend, end of 15, beginning of 16, it's challenged, okay, and violated. They take it back in 16, and then the rest of the year we move up. We had that rising 3 candlestick pattern that we talked about, in last year, and looking for a continuation pattern, because this is a continuation pattern. Big green candle, 3 red candles, cascading, and then engulfing green candle. And then we've got our continuation. We've got good slope and separation. We don't even challenge the trend on the monthly until we get back down into the 2260 area. We did have our first negative month last month. We closed the month 4 points down below the open. Currently, right now, the month open is 2357.50, and we're just trading just above it, back in that balance. The trend is intact on the monthly. Going to the weekly, same thing. We had this strong trend up, created the technical gap, came back, closed the technical gap, bounced off of it, and we're getting a continuation pattern on the weekly. Going to the daily, okay, we had that blow off top, the foo bar, the Mr. Sneaky inside bar with the technical gap. We come down, we close the gap, go sideways, try to get the continuation, then fail, come down, and now we're coming back up, and we're trying to get back above the 9 and the 20, and we have a symmetrical triangle, okay, on the daily. So watch the breakout, and you can see that if we look at this right here, okay, we're just coming in towards the breakout of the symmetrical triangle. So if we break out, look for the continuation. It looks, based on the action, that we're going to get a breakout to the upside. We're getting compression. Our daily ATR got down below that 15 points. When we talked about that, we said we're going to look for some expansion. We did get some expansion, and they broke out to the downside, but now they've taken it all back. Going to the intraday, okay, you can see that we're back above the 9 and the 20. We're coming up and we're testing this upper trend line of the daily. Got a bit of a cup and handle situation here, and right rim would have been a breakout above the 59, and we got that on the news. Not a really good pattern, but right now we're looking for now a continuation of the upward trend that we had going here, and a completion of this downward trend. Going to the 30-minute, you can see that we have our breakout from balance that we had on the 30 minutes on the news. We've got good slope and separation starting, but we have created a technical gap that we could come back and close, and I would think we'd come back into the 58, 59 area to close that gap through time and price. Going to the 15-minute, you can see that again, good slope, good separation. The trend is to the upside. We do have a FUBAR Mr. Sneaky on news, so we could get a pullback here and a move back towards that 58.59, to close that gap on the open. And going to the 5-minute, you can see that again, good slope, good separation. So all our time frames, okay, is showing neutral to positive trend. Okay, so if we go to our structure, okay, we're right back in, okay, this distribution zone. The longer term, and this should go one day more this way. I don't know why it shifted. The longer time frame from the gap up, okay, to today, the microcomposite VPOC is at 59.50. From the breakdown of last Tuesday, the VPOC is at 55, and in the last 5 days, you can see that the sellers have been stepping in here at the 64. So what we have is we have a larger distribution, okay, that's, centers around the 70.50 and the 48.50 with undetermined fair value. Okay, we need to mature this auction in order to get a move. Now, if they come up into the 64.50 where the sellers have been stepping in, okay, we have an incomplete auction up here at the 66.75. We've got a weak high at that double top. If they can come up and accept price around 64.50 and they challenge this 66.50, look for them to push through to the other side of this balance and up into the 70.50. Maybe a little bit of resistance right here at the 69.75. That's the longer time frame value area high, okay, of this microcomposite. But anything above the 70s, I'm targeting, okay, the first target, which is where we tried to hold value, the last place we tried to hold value before the significant breakout candle, and that is at 76.50, with 77.50 being the next big target above. And, obviously continuation. Remember that we do have, okay, an unequalized high between the June contract and the March contract. I've talked about this many times about them needing to equalize those two highs out at some point in time. Does it have to be this month? No. Can we break down from here? Yes. But the indication is, okay, that we've broken the one-time framing down, okay, with this move up this morning. We had this, 3-day move down, and now we're breaking above and we're coming up into that 64. I'm expecting to see some chop between the 59.25 and the 64.50 today. If we don't hold the 59.25, then possibly move back down into the 55. Key line in the sand below is 48.50. That completes a breakout of this distribution zone, and I'll be targeting back down into that 41 area again. And this time we come back there, I don't think we're going to hold. I would be looking for a bigger move down to the lower side of the distribution and move down towards that 28, 29, even possibly back down into that 19. But you can start seeing that where we come back and pick up late buyers is where they accepted value. I mean, you break out of balance, okay, where do they go? They go right to the last microcomposite VPOC before the move up, okay? They chop around there, they fall out of that balance. Where do they come back to? Right back to the 19, okay, where this all started with the gap up. Now they're working their way back up towards those levels, okay? Where did we fall down to yesterday? 40, on Monday, 41. This pattern will repeat itself. You don't have to overcomplicate it, okay? And all you have to do is look, where did they try to hold value and where did they find value before a move, and look for the areas of price rejection, and when they're broken, then you're looking that, okay, we're now back in price discovery, okay, and we got to go down to pick up buyers, or we got to go up to entice the sellers, and that's the auction, Okay, it doesn't have to be that complicated. Taking a look at the overnight. Overnight, the inventory has been net short, okay, but we're now back above the open of the Globex. So probably I would say 75 percent or more is net short inventory. And these guys could get squeezed today, and why we could see a move up into that 66.75 and 64.50 as our main target. So taking our levels, our overnight low is 52.50. Our overnight high is 62.75. This could change. We're not too far off of it. Our VPOC is all the way down here at the 53.50. Not likely going to shift. We might see a shift if we trade some more here at 61, but I think there's too many contracts that we'll need. But we'll keep an eye on it. We still have 30 minutes to go thereabouts. So 53.50. So just one tick off of the balance that we were in yesterday. And there is an LVN right here at the 59.75, which is just below the 58. I'm going to use the 58.50. I'm also going to use the value area and the close at 56. Value area low because the value is very strong from yesterday. And then, of course, I mean, these are no-brainer levels. Now, our daily ATR, our 20-period full session daily ATR is running at 1743. So off of the low overnight of 52.50 plus 1743, our upside daily ATR target is 69.93, so basically 23.70. Just below the FOMC number. So we have range capabilities up into the 70. Our overnight high 62.75 minus the daily ATR of 1743 is 45.25. So just below yesterday's low. All right, and that's basically all the information I need from the overnight, so we'll get rid of that. Expand this out. So right now, okay, we're trading, okay, right at that range high from Monday at the 61.75. So I'm going to be using that as a trade level. And 67 doesn't change, 70 doesn't change, and targeting 64.50. Going to move this down to 66.75. All right, so those are basically our levels. Now, anytime we open up out of range, out of value, what do we have to look for? We have to look for an open test drive or an open drive. Do not fade any drives, okay, when you have an open auction out of range. Okay, if you see a driving force here, you don't want to try to short that. But my main hypothesis is going to be an open auction out of range, a push down towards the 59, okay, possibly even 58, maybe even 56, but somewhere between the 59 area and the 56 area, I'm looking for initiative buyers to step in and rotate us up. Okay, and our main target on Hypo 1 is going to be that 64.50, chop around and accept that price, and then push up and break through that week high at 66.75 and come up and close somewhere, okay, in the mid to high 60s. Not expecting a huge breakout day. I'm expecting them to come up and try to accept value in around the 64.50. Now we do have news, so I'm expecting this move to happen early and then go sideways into the Fed news. And then based on the Fed news, we're either going to have a big breakdown or we're going to have a big move up. I think that the market is baked in these rate increases, so I don't think that we can get much to the downside as much as we can get to the high side. So a break on the news, we could get a late day probe, okay, up into that 76 area that we were talking about. So hypo 1, open auction, outer range, move down, find initiative buyers between 59 and 56, rotate us up into the 64, chop around into the 64, and going into the news with maybe a poke up into the 66.75 and a break, but likely going to chop around in the 64.50, coming into the news as we accept that value higher. Hypo 2 is an open auction, out of range, a push up into the 64.50. I see the buyers step in again, maybe even a false breakout above that week high at 66.75, but somewhere between 64.50 and 67 area. I'm looking for them to find responsive sellers and then push us back down into this 59 area, fight the range high from the prior day, okay, and then push down into the value from yesterday and chop around in here coming into the news. That is hypo 2. Hypo 3 is an open test drive or an open drive. Open test drive, failure to close the gap, finding buyers in around the 60 area, okay, on an open test drive, and then drive up into that 66.75 area and chop around up here, and then get continuation, okay, and a move up into the 77 area. So basically a continuation day, possibly even a gap and go day. If we open up right here, our half gap fill, 56.50, 61.50 divided by 2 is 59. So that 59 area is your half gap fill against the naked close. In terms of the range gap, okay, it's going to be somewhere around the 59.75 area. Hypo 4, okay, is an open auction, out of range, failure to get above the 64, come right back down into value, chop around in value, get an 80% destination trade to the lower side of value down at 50.50, and then on news fail and take out the low at 46 and break that key line in the sand at 48 and get the continuation move back down towards the lower 2300s. That's the less likely scenario based on the current auction that we have. So those are my 4 main hypotheses for ES. Come on. Taking a quick look at gold. We had a significant change in gold today. Okay. We had the composite VPOC shift from the 2170 up to the 5480. I've done multiple downloads, so I'm trying to get confirmation because I was surprised with this shift. But this composite goes all the way back to October the 9th, 2008. So our most traded price in all those years, okay, is now right in the balance that we're in, and one of the reasons why we're seeing us balance out around this area. The microcomposite VPOC, okay, is sitting at 1251.1 area, and then where we tried to hold value before this 42-point move down was up here at 61. So we're likely to chop around that 54.80 level again today until we get news, and then the news could take us, because we're seeing consolidation here, the news could take us below the balance that we're in. I'll be watching the 1245, 1246 area for a push down to the 39, but the 39 area is basically my key line in the sand on gold. Anything below that, then I think a trip back down into this this 18 and 21 level is likely. But if we accept value around the 1254.80 and we break the 66.80, again, the next big destination, okay, is all the way up here, okay, at the 1313. Okay, so with the first target at 75 area and 87 area, but there's not a lot of resistance, okay, to hold us down. You can see we came down through this area pretty strong and pretty hard. And again, we've got a former microcomposite VPOC where we tried to hold value here at 65.80, which we've been bumping up against and failing on. If we can get back above that 66.80, then there's not much resistance above us, and we're looking for that continuation up into the 1300. Anyway, that's a lot to cover this morning. That'll complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.